We interact with our banks all the time, right? Tapping cards, checking balances on the apps, sending money.
Constantly.
But have you ever really thought about what's actually running things behind the scenes? The engine?
The core banking system. Yeah.
Yeah.
It's the absolute backbone. Juggles all the transactions, keeps track of everything. Basically stops it all from falling apart.
Exactly. It sounds super technical, maybe a bit dry, but it really dictates how well or sometimes how badly your banking experience actually works.
It absolutely does. And that's what we're diving into today, the core banking scene, specifically in Australia and New Zealand.
Huh.
We've got this analysis. It's called Analysis of Core Banking Market in Australia and New Zealand Continuous Improvement.
Okay.
And it's full of detail about the changes happening sort of under the hood of your banking app.
Right, the quiet revolution, you could say.
Uh,
So our mission here is to pull out the really interesting, the important stuff from this analysis for you.
yeah, give you a clear picture of what's driving change in ANZ banking tech without, drowning you in jargon.
Perfect. Okay, let's get straight into it then. What are the big trends? What's really pushing these banks in ANZ to shake up their core systems?
Well, the biggest one, I'd say, is definitely this drive for core modernization. And that's tied really closely to moving things onto the cloud.
Modernization, meaning getting rid of the old stuff.
Pretty much.
Yeah.
A lot of banks have been running on core systems that are, frankly, decades old, sometimes mainframe-based.
Wow.
And these older systems, they just struggle. They struggle with instant processing. They're not agile enough to launch new products quickly. And the sheer volume of digital stuff now, it's tough for them.
It really is like trying to stream Netflix on an old dial-up modem, isn't it? Just can't cope.
That's a great analogy, actually.
Yeah.
So they need to fix that bottleneck.
So how are they doing it? What's the solution?
The analysis shows a really clear trend, moving to cloud-based core systems or adopting what's called software as a service, or SaaS, platforms.
SaaS, like renting the software online instead of owning the big servers yourself?
Exactly. And that gives them huge advantages. Scalability, for one.
Meaning they can handle those massive peaks like payday or Black Friday.
Precisely. And resilience, too.
Yeah.
Which, should mean fewer of those incredibly annoying system outages where you can't get to your money.
Okay, that sounds good. Are there, like, real-world examples of this happening in ANZ?
Oh, yeah, definitely. Take ANZ Bank New Zealand. Big move there.
What did they do?
They picked FIS's modern banking platform, and crucially, it's hosted on Microsoft Azure, so it's cloud native. They're replacing their old legacy core.
Okay.
And what's really interesting, the analysis points out, this was the very first time that specific FIS platform was used outside the U.S.
Oh, wow. So NZ was the test case, almost?
Kind of. It shows a real appetite down here to jump straight to the modern cloud stuff. It suggests NZ was willing to maybe take a bit more initial risk for a system that's hopefully more agile and future-proof.
That is a bold move. What about in Australia? Any big projects there?
Oh, yeah. Commonwealth Bank CBA. They're in the middle of a massive overhaul, partnering with SAP.
Massive, like...
We're talking reported investments over $1 billion Australian dollars. Huge.
$1 billion, wow.
Yeah. And the goal is real-time banking, proper real-time across every channel. The app, online, in the branch. Seamless.
Okay, that scale is pretty mind-blowing. It shows the big banks are serious.
Definitely. They're fundamentally re-architecting things.
So let's bring it back to the listener. For you listening, why does all this techie stuff actually matter? How does it affect, everyday banking?
Well, ultimately, it should mean a better experience for you. Think faster transactions, almost instant.
Okay, I like the sound of that.
More personalized services, maybe offers that actually make sense for you. And crucially, fewer of those system meltdowns.
Right. Less system unavailable messages.
Exactly. It's all about making banking more responsive, more reliable.
Okay, that makes sense. Progress we can actually feel. Now, another trend you mentioned, or the analysis mentions, is digital banking and these neobanks. How did they stir things up?
Yeah, they definitely shook the tree. The rise of the digital-only banks, the fintechs, it put serious pressure on the traditional guys.
Because they didn't have the old baggage.
Exactly. They had a massive advantage. No decades-old legacy systems weighing them down. They could build everything on modern core platforms right from the get-go.
And we saw a bunch of those launch in Australia around, 2018, 2019, 2020.
Yeah, that period. You had names like 86400, Volt Bank, Judo Bank popping up.
Right.
And they all built on modern cores. 86400, for example, used a cloud-native core from Data Action. They're an Adelaide company.
Okay, local provider.
Yeah. And their focus was heavy on open APIs. those connectors that let software talk to each other and keeping costs down.
Now, I know some of those early ones didn't quite make it, right? They got bought or closed down.
That's true. The landscape definitely shifted. Some were acquired, some handed back licenses, but their impact was still huge.
How so?
They showed what was possible. They proved the model. They forced the established banks to really look hard at their own tech.
Right, they set a new bar.
Totally. And you saw responses like Bendigo Bank launching up their digital brand.
Yeah.
That was a direct reaction. And NZ, Westpac New Zealand, is upgrading its core with Infosys Finacle, specifically mentioning the need to compete with digital challengers.
So the neobanks were like a catalyst, even if they didn't all survive individually.
Precisely. They were the proof of concept, you could say. Pushed everyone else forward. And that brings us neatly to another big trend, open banking and APIs.
Yeah, the consumer data, right, in Australia. CDR, how does it fit in?
So CDR launched mid-2020. Basically, it gives you, the consumer, the power to safely share your financial data.
With other apps and services, like budgeting tools.
Exactly. Or comparison sites. The idea is you can get better deals, better insights. But for that to work well, banks need core systems that can actually do the sharing securely.
Yeah.
Using these open APIs we mentioned.
APIs being like secure digital messengers between different systems.
That's a good way to put it, standardized messengers. So your budgeting app can talk to your bank without needing your actual login details.
Okay. And the older core systems, the siloed ones, they'd struggle with that.
Totally. They weren't built for that kind of open sharing. And it's not just open banking either. Think about real-time payment.
Like MPP in Australia, AI in OSCO.
Exactly. That needs systems that are running 24/7, built with these flexible API-first designs. You can't do instant payments if your core system is still running batch jobs overnight like it's 1990.
Makes sense. Okay, so we've got aging tech needing replacement, pressure from digital newcomers, and this push for open data sharing. What else is driving these core upgrades?
Regulation and security. Huge drivers.
The regulators, APRA in Australia, RBNZ in New Zealand.
Yep. They have increasingly strict rules around data security, operational resilience, like can the bank keep running if something goes wrong, and managing risk overall.
And modern cores are just better at meeting those rules.
Generally, yes. They're designed with modern security standards in mind, better uptime capabilities. It's easier to build in the required controls and reporting.
So it's not just about cool new features for us, it's fundamental stability and safety stuff too.
Absolutely. And the analysis actually gives a bit of a cautionary tale here with Kiwi Bank in NZ.
Oh, what happened there?
They started a big core replacement project with SAP. The goals were better compliance, more innovation. But they ran into major delays, costs blew out significantly.
Ouch.
Yeah. It just highlights how incredibly complex these projects are. It's high-stakes stuff. Definitely not just flipping a switch.
No kidding. Okay, so let's talk about who actually makes these core banking systems. The analysis said the market is bifurcated. What's that mean?
It basically means there are two main camps of vendors fighting for business. And on one side, you have the big, established global companies, the ones who've been doing this for years, sometimes decades.
Right.
And on the other side, you've got newer players, the challengers, who are mostly focused on cloud-native solutions, born in the cloud, essentially.
And the big four Aussie banks, historically, they've stuck with the established guys or even built their own.
That's generally been the case, yeah. CBA, NAB, Westpac, ANZ, they often have proprietary systems developed in-house years ago, or they use cores from those large, long-standing vendors.
So getting one of them to completely rip and replace their core must be rare, but a massive deal when it happens.
Exactly. Huge deals, fiercely competitive. But the analysis also points out there's a lot of business with the smaller banks, the regionals, the credit unions, mutual banks.
Yeah.
More frequent opportunities there, even if the deal sizes are smaller.
Okay, so who are these big global players we see in ANZ?
Well, you've got names you'd probably recognize. Temenos, Oracle, FSS, they make FlexCube Finastra, FIS, Fiserv, TCS Tata Consultancy Services, and Infosys Finacle.
Right. A lot of the big incumbents are running on versions of those systems already.
Often, yes. Sometimes heavily customized over the years.
The analysis mentioned Temenos quite a bit. What's their position in ANZ?
They're pretty strong in the whole Asia-Pacific region, including here. They've got a good number of customers among the Australian mutuals and community banks. And interestingly, they're seen as a market leader in New Zealand and also Vietnam.
Okay.
Their strength has often been the breadth of what they offer, though, like everyone, they're pushing more toward cloud now.
And Oracle FSS with FlexCube, I think you mentioned NAB earlier.
Yeah, Oracle's FlexCube is a major global player, and have used it for their big next-gen program. Suncorp also uses it, though the analysis said something about mixed outcomes there. It's very widely used across Asia as well.
Okay. What about Finastra?
Finastra came from a merger Mises and D+H. They have a few core platforms like Fusion Phoenix, Essence, Profile. They've got a foothold in ANZ, maybe more with regional banks or local arms of international banks. Westpac NZ uses some of their payments tech too.
And FIS, you mentioned their win with ANZ New Zealand.
Yeah, that was a big one for FIS. They're a huge U.S. fintech company. Winning that ANZ-NZ deal for their cloud-native modern banking platform was seen as a major breakthrough for them in this region. It gave them a key reference site outside the U.S.
Gotcha. What about Fiserv, another U.S. giant?
Their direct core banking presence in ANZ right now seems a bit limited.
Right.
But they bought a company called Finxact recently.
Okay.
Finxact is a modern cloud-native core platform. So that acquisition could be Fiserv's way into this market here, maybe targeting the digital banks or smaller guys looking for something agile. Just want to watch.
Right. And Infosys Finacle, big in Asia, you said?
Huge in Asia.
Yeah.
And Westpac New Zealand chose Finacle back in 2020 to replace their old systems. That was a significant win for Infosys here.
Okay.
Finacle's known for its track record in Asia and good digital channel integration. But yeah, not much traction with the big Aussie banks so far.
And lastly, TCS BANCS.
Yeah, from Tata Consultancy Services. They've had some good wins in Australia's mid-tier. Credit Union Australia, now Great Southern Bank, and My State Bank both use BANCS.
Oh, interesting.
And even the Reserve Bank of Australia picked PCS BANCS for a major tech overhaul. So definitely a credible player.
Okay, so that's the established crowd. Now, these neo-core challenger entrants, what's their story? What makes them different?
These are the newer kids on the block, often fintech startups themselves. They built their core platforms specifically for the cloud, right from scratch.
And their selling point is?
Speed, basically. Faster implementation, more agility, more flexible systems. Think companies like 10x Banking, Thought Machine, Mambu, and others using names like Vault.
10x Banking? Didn't Westpac partner with them?
They did. 10x is UK-based, founded by an ex-Barclays CEO. Westpac partnered with them back in 2019 to build a banking-as-a-service platform, BaaS.
BaaS letting other companies plug into banking services.
Exactly. Westpac also invested in 10x. More recently, 10x teamed up with Deloitte Australia, looking to sell their SaaS core to mutual banks here. They haven't landed a full core replacement deal with a major Aussie bank yet, but they're definitely in the mix.
Okay. And Thought Machine.
Also UK-based. Their platform is called Vault. They've got an office in Sydney. Judo Bank is a key client. They moved their lending onto Vault in 2024, saying their old systems couldn't keep up.
Right.
Vault's also used by Trust Bank in Singapore and Standard Chartered's digital banks in Asia, so it's getting regional credibility.
What about Mambu?
Mambu is a SaaS banking engine, very API-driven, very flexible, popular globally with fintech lenders and neobanks. They were reportedly the platform behind Volt Bank here in Australia.
Okay.
Their strength is really enabling fast launches of digital products, loans, deposits, payments. Good for new digital ventures.
So these newer players are all about speed, adaptability, cloud native.
Yeah, very much so. Componentized cores, microservices, open APIs, faster upgrades. It's a different philosophy to the older, more monolithic systems.
And the analysis mentioned some local players too. Ultradata, data action.
That's right. Ultradata's Ultrac system has been around a long time, used by lots of credit unions, even Kiwi Bank way back. But it seems to be getting replaced more often now.
Okay.
Data Action, though, based in Adelaide, they're doing well. They power a lot of Aussie mutuals. And as we said, 86400 chose their cloud platform because of its modern design and API support.
Right. And Silver Lake Access.
Big in Southeast Asia, but not really active here in Australia, according to the analysis.
So it's definitely a busy marketplace, lots of options. But the analysis really hammered home that switching core systems is just monumental for a bank.
Oh, absolutely huge. It's not like swapping out your laptop. These are multi-year, incredibly complex, high-risk projects.
Which explains why banks put it off.
For as long as possible, often. Vendor selections usually only happen when the old system is really creaking or there's some massive strategic shift. There's huge inertia.
Yeah.
I mean, the fact that ANZ's CIO publicly said their old Hogan core, which is ancient, isn't yet a hindrance. That tells you everything about how reluctant banks can be to bite the bullet. Relationships, trust, the sheer scale of the task. It's a slow-moving market in many ways.
Given that complexity, it makes total sense that banks need help. which is where the system integrators, the SIs, come in.
Exactly. You just can't do these massive core projects without expert help. The SIs are crucial partners for the banks.
Doing what exactly?
Everything, really. Helping choose the right vendor in the first place, customizing the platform, integrating it with all the bank's other systems, which can be dozens or hundreds, managing the project, handling the change management. It's a massive job.
And who are the main SIs doing this work in ANZ?
The analysis lists the big global consulting firms, Accenture, Deloitte, Capgemini, IBM Consulting.
The usual suspects.
Yeah. Plus the big IT services firms with Indian heritage like TCS and Infosys, Wipro too, and DXC Technology. And then there are also smaller, more specialist fintech integrators popping up.
Accenture got a specific mention with CBA's big SAP project, didn't they?
Yes, they were the lead SI working alongside SAP on that huge transformation at Commonwealth Bank. They have massive financial services practices and deep experience in these large-scale core implementations.
What about Deloitte?
Deloitte also has a strong banking tech practice here. They're focusing a lot on core modernization advice. And that alliance they have with 10x Banking is part of that strategy. They do a lot of advisory, vendor selection help, project assurance too.
And Capgemini.
Capgemini, especially after buying iGate, has a lot of experience implementing cores like Finacle and Temenos, particularly across Asia. They were involved in parts of Navy's Oracle program previously too.
IBM Consulting, are they still big in core banking?
IBM has that long history with bank IT, obviously. Maybe fewer brand new greenfield core implementations these days, but they're still vital for maintaining and upgrading older systems. And their cloud and hybrid cloud expertise is really relevant now as banks shift workloads.
Right. And TCS and Infosys, you mentioned, they often implement their own core products.
Yeah, that's a key point. Infosys would have been heavily involved in the Westpac NZ Finacle rollout, for example. They bring that deep platform-specific knowledge.
Makes sense. DXC Technology, what's their angle?
It's interesting, DXC actually owns some of the legacy core systems, including Hogan, which ANZ still uses parts of. So they provide outsourcing and support for those older platforms, keeping the lights on for some banks.
Okay, and the specialist firms?
These are usually smaller, more nimble outfits. They might specialize in integrating specific vendor platforms like Temenos, or focus on the digital front-end integration. Rubik Financial was one before Temenos bought them. XPT Expert Digital is another example mentioned, strong in Temenos implementations.
It really sounds like a gold rush for these SIs with all this modernization happening.
There's definitely a lot of opportunity. Every major core replacement is a huge project, plus all the digital banking initiatives, upgrades to existing systems. It all needs integration expertise.
But competitive too, I imagine.
Extremely. You've got the global giants, the vendor-aligned players, even the core vendor's own professional services teams all competing for these projects. It's a tough market.
Okay, let's look ahead. What does the crystal ball show for core banking in ANZ? What are the key future trends from the analysis?
Well, one thing is clear. Cloud is the future. Cloud-native, modular systems, that's the direction of travel.
Modular meaning?
Breaking the core down into smaller, independent building blocks or microservices. Think Lego bricks instead of one giant slab.
Right, so you can swap out pieces more easily.
Exactly. It allows for more gradual upgrades, maybe running a mix of old and new systems, a hybrid approach for a while. This whole idea of composable banking is gaining steam.
Composable banking? Building your bank from different service blocks?
Kind of, yeah. The core is just one component in a bigger ecosystem. And seeing regulators in places like Vietnam now allowing core banking in the public cloud, that could be a sign of things to come here too.
Interesting. What about data and AI? How do they fit into the future core?
Hugely important. Future cores are being designed for real-time data. Not batch processing overnight, but instant data flows.
And that feeds into AI.
Precisely. Feeding AI engines for things like super personalized offers, real-time fraud detection, maybe even using AI within the core itself for monitoring, self-healing, or like Accenture's doing, using AI to help understand and modernize old legacy code.
Wow, okay. And regulation, still a big factor going forward.
Absolutely. Regulators like APRA pushing operational resilience. CPS 230 means banks need cores that are rock solid and easily recoverable.
Right. Can't afford downtime.
Nope. And open banking will keep pushing for more open API-ready cores. Plus, the general focus on competition means banks need agile tech to keep up.
What about the market dynamics? Will we see big shifts?
Probably continued blurring of lines between the old banks and the new challengers. You'll see incumbents launching more digital-only brands, often on new core platforms.
Like UBank or Up?
Exactly. The success of those And neos like Judo kind of proves the cloud-first core model works. So the pressure's on everyone to modernize for agility and better digital experiences. We might even see some vendors merging or acquiring others to strengthen their offerings.
And finally, what does this all mean for us, the customers, in terms of new products and services?
Well, modern cores are the enablers. They make it possible to launch innovative stuff faster. Think seamless buy now, pay later options built in, maybe more advanced digital wallets, potentially even handling crypto assets down the line.
Crypto custody. Really?
Banks are exploring it. And things like blockchain integration or providing banking as a service. All that needs a flexible, modern, API-driven core system.
Okay, fascinating stuff. Now, the analysis also drew a comparison between ANZ and Southeast Asia. What were the key differences highlighted?
Yeah, that was interesting. The main takeaway is that Southeast Asia's core banking market is generally seen as being in a higher growth phase right now compared to ANZ.
Higher growth. Why is that?
Several reasons. Market maturity is one. ANZ is mature. Most people have bank accounts. But in many SCA countries, there's still huge growth in basic banking penetration, financial inclusion. New banks are still being licensed.
So more greenfield opportunities building from scratch.
Exactly. More brand new core system implementations needed on top of the replacement market. So overall tech spending growth rates tend to be higher in SCA.
Okay.
There's this real urgency there too. The analysis cited a stat something like 94% of Vietnamese bank execs think slow tech transformation is costing them customers. That focuses the mind.
Wow. And the drivers are different too.
A bit. In ANZ, it's often about replacing legacy tech, meeting digital demands, complying with regs. In SCA, financial inclusion is a massive driver, plus intense competition from new digital banks, and huge consumer demand for digital services from a young population. Regulators there are often actively pushing for modernization through new licenses, too.
It sounds like they might even skip generations of tech. Leapfrog.
Potentially, yeah.
Yeah.
Less legacy baggage means some CA banks can jump straight to the latest cloud-native stuff. We saw that example of VIB in Vietnam running its core entirely on AWS public cloud. That's still quite rare for a major bank's core system in ANZ.
That is a big difference. So the regulatory push is maybe stronger in NSE?
Sometimes seems more explicit, yeah. Issuing digital bank licenses often comes with tech requirements attached. Here, it feels a bit more market-driven, though regulators obviously want stability and progress.
And the overall market potential for vendors.
ANZ has the big banks, so potential for huge deals, but fewer of them. ANZ has way more banks of different sizes, a much broader base of opportunities, more fragmented, maybe higher overall growth potential for vendors right now.
So summing that up, ANZ is stable, mature, focused on upgrades and strategic replacements. AZA is high growth, emerging, lots of greenfield activity.
That's a good summary. Both regions are definitely moving towards modern cores, but just at different paces and driven by slightly different forces.
Well, this has been genuinely fascinating. Peeling back the layers on something most of us never see, the core banking system.
It really is the hidden engine room.
Yeah. And it's clear the ANZ market, while maybe more mature than SEA, is going through this really significant period of change. Tech, competition, regulation, it's all pushing modernization.
And the investments banks are making now deep in that engine room will absolutely shape the banking services you use every day for years to come.
Absolutely. Which kind of leads to a final thought, doesn't it? As banks keep upgrading these incredibly complex, unseen systems, what kind of unexpected changes or innovations might we actually see?
Good question.
What new financial services might suddenly become possible? Things we haven't even thought of yet, all thanks to these transformations happening behind the curtain.
Yeah, what does a truly modern, flexible core unlock down the track? It's definitely something interesting to ponder for your own financial life.